Alright, guys, so let's talk about Germany. Let's talk about the EU today because a lot of funny things, a lot of curious things have happened over the last week. Now, the last few days have been a whirlwind for the EU. Now, Vance basically tore the EU a new one across free speech, censorship laws, and of course, defense. It's important we think back a few days ago when Trump mentioned bringing Russia back to the G7 or the G8. Now, that triggered Germany the most. Baerbock basically rejected the idea of Russia coming back, saying that there can be no normal cooperation. But also, peace is possible, so there's a lot of confusion here in the room. Now, meanwhile, the EU is rebuking, right? You should just seen the faces of all the generals, all the defense ministers there. They were in utter confusion when it came to what Vance was saying to them. Now, the EU foreign minister says that the EU and Ukraine, they need to be on the negotiating table, at the table, and not just the US. And you can't really blame them for that either, right? The US is moving to exit the theater of war, and that puts extreme defense as well as financial pressures on the EU.
It is clear that any deal behind our backs will not work. Any agreement will need also Ukraine and Europe being part of it, and this is clear that appeasement also always fails. So Ukraine will continue to resist, and Europe will continue to back Ukraine.
Is the US listening?
Well, you need Europe and Ukraine to also implement the agreement.
At the end of the day, Germany is on the back foot. The Germans are vowing epic pushback against the US over the trade tariffs, and that is completely separate from the defense issue. Now, Olaf Scholz came out saying that Germany and the EU is strong enough to react to everything harming the EU economy. And if that's really the case, it's quite suspect to really take it quite seriously, right? Now, the EU is facing a wave of escalating Trump tariffs on both their steel and cars, and which is the biggest manufacturing economy in Europe? Well, of course, it's Germany. Now, the problem with getting tariffed out of the US market is that the EU will have to compete on the global stage. They will be losing a very lucrative market that excludes Chinese goods. And who's the biggest industrial competitor out there? Sure, some of the competition will come from Japan, but they're struggling as well. The biggest industrial competitor is China, and their manufacturing ecosystem and their supply chains all fleshed out. And can the EU really compete with them? There's a reason why many EU companies they are moving to the US as well as to China. BASF, the chemical company, they are expanding their operations in Beijing, in some provinces in China, and there's a reason why. Now, 80% of Volkswagen cars sold in the US, they are imported in, right? So when Volkswagen sells 10 cars, 8 of them are imported from other countries. This could be China, this could be Germany itself. They sent to the US to get sold. Now, 63% for Mercedes and over 50% for BM. Only a minority is made and manufactured in the US. And that's why Trump is quite annoyed about this. He wants to move a lot of manufacturing back to the US for a lot of German cars to be made domestically as well. Now, if Trump decides to tariff German cars, a 10 to 20% tariff can wipe out their razor thin profit margins, and this could lead to either a big profit collapse or industries moving to the US, right? They'll leave German soil. We'll see more Volkswagen factories and plants close down and just move shop all the way across the Atlantic. Now, the EU currently has a 10% tariff on US cars, but they are willing to lower it to 2.5%. Now, ask yourself, why is that the case? Why are they so eager to suddenly drop it? Is it because they are not really buying a lot of US cars? There's no skin off their back because they hardly import much. The US today buys 6 to 7 times more cars than what the EU is importing in from the US. And it's not only about price. A lot of it centers around fuel efficiency and reaching their climate goals. Now, if I'm not wrong, by 2030 or 2035, the EU wants either 70 or 100% of all new cars to be emission free. In other words, EVs. So if you're the Europeans today, you are really caught in a quagmire. You're in a very big quandary. You realize that you're behind the eight ball everywhere. China, for example, is using subsidies from the trade surplus to bolster their own industries, while you yourself, you're constrained in a very tight fiscal policy. You can't really spend, borrow, or print as much money as you want. While the United States has a protectionist policy, they are using tariffs to protect their own industries.
Whilst China is using subsidies to boost their businesses, US is using tariffs to support their. The EU is sadly only one of the few global actors that really are playing by the international rules-based order today.
So first it was Macron, and now it's Scholz asking for the EU to loosen fiscal rules to allow member states to invest and spend. Because just look at a big bill coming for the EU. Over the last few videos that we made, it's quite apparent that the EU will have to spend trillions of dollars. Estimates put it at around 3 trillion to bolster their own defense as well as their own industries as well. So they have to find a way to come up with the money. Now, there's a reason why the ECB today, the European Central Bank, is cutting rates aggressively because they realize that, hey, this is the only lever they can control. They can't control the production, the supply, and demand of oil and gas. It's beyond them. And other inputs such as rare earths, critical minerals, they are just outside of the purview. So borrowing cost is the only variable that they can manipulate, that they can tweak with. Borrowing costs have to come down. Now, this is a very big game changer, especially if you're an investor looking to allocate money, right? Because we could be entering an era of unbridled EU spending if they really get squeezed enough. Now, it's great for investors, great for people allocating money, but it's going to be bad for inflation in general. And we do not know if this will actually help the EU industries gain back their competitiveness, right? Will it really help them secure more supply chains? Will it allow them to build up their automations, or will it just trap them in a very bad debt trap? But let's talk a bit about Ukraine rejecting America's 50% rare earths deal because it's connected to Europe as well. Now, over the last day, Donald Trump, he sent his Treasury Secretary, who is basically Yellen's replacement, Scott Bessent, all the way to Kiev, all the way to Ukraine to talk about trying to own 50% of rare earths minerals under the ground for the US. Sending Bessent all the way there just shows that the US is being extremely serious about it. Trump is not joking. At the end of the day, it's important to realize that support from the US is not unconditional. Yes, Biden might have said so, but Biden lasted for what? 4 years? And then Trump comes in. So whatever Trump says as well, it's going to be conditional. It's going to be so-called unconditional for the next 4 years. After that, it's anyone's game. Now, Trump says that the US needs $500 billion in Ukrainian minerals to repay the support the US gave. Now, I don't know about you, but I don't think the US gave $500 billion worth of support to Ukraine yet. I know it's a lot of money, but what Trump is asking for is at least 2 to 3 times higher. Now, this is a fantastic investment return. If this somehow manifests, it's going to be a big windfall for the US, not just in terms of absolute dollars. They get to secure their supply chains and take a step closer towards competing with China. But Zelensky basically trapped himself over the last few weeks. I think he gave Reuters an interview saying that he's willing to make a deal with Trump to work out a deal with the US. So now the rare earths are on the table. It's a conversation topic and it's not going to go away. The EU, of course, is terrified because if Trump gets his way, a big bunch of resources will be transferred from Ukraine to the US, and the EU will be left to foot the biggest bill since the US is going to pull out military support and they have nothing left, there'll be no benefit. There'll be no quantitative benefit. Now, why did Ukraine reject it? It's important we understand why. Because the deal reportedly had no real security guarantees for Ukraine, except for possibly putting US troops to protect the minerals for harvest. So the troops might be on the Ukrainian side of the border, westwards from the front line. It's just like US bases in the Middle East trying to protect their oil interests, but this time it's rare earths. So it's not really a very equitable deal. And there's also another problem. A lot of rare earths are controlled by Russia. Now, there's a lot of talks saying that the Russians control more, the Ukrainians control more. And let's just say that at least within the occupied areas in Ukraine, Russia controls a substantial amount of rare earths. Now, these are the estimates, right? That Russia controls a huge amount of non-oil minerals. At least 30 to 40% of metals, ores, rare earths, and coal, they're eastwards. Even some precious metals, more than 15 or 20%, they are controlled within the Russian occupied oblasts. Now, how much is really left for the West in this case, left in West Ukraine? If the US takes 50% of the remainder outside of what Russia possesses, what does that leave the EU with? Something to really think about, especially if Trump is pushing for an absolute value of $500 billion. Is there even $500 billion under the ground? No one knows exactly for sure. Now, as Russia pushes westwards, the more a peace deal and a settlement eludes us, even more resources would be lost. But let's talk a bit about the frozen assets because it might be done this time. A big bone of contention revolves around the negotiations. Now, obviously, Ukraine wants the money. Zelensky has made it very, very clear that he wants over $200 billion to support his war effort.
American money, good. Give us 250 billions, which are here in Europe, frozen Russian assets. No answer.
However, this throws a big question to the EU. Now, the bulk of the money is sitting in Euroclear, around $200 billion. The US has less than $50 billion, if I'm not wrong. And can the EU really give the money back? Because they might be under enormous pressure. Ukraine wants the $300 billion to buy US weapons and arms. So this is revenue flowing directly to the US economy. This is important because it shows how the Russian asset saga could be ending. Trump is asking Russia and China to de-escalate the military competition, but yet the military-industrial complex, the MIC, needs to be fed. If the US defense budget to the MIC is cut, the money will have to come from elsewhere. It's very basic here. Taking Russian assets is a real possibility. But the EU has already spent billions of the Russian assets proceeds already. So how will the negotiations go? This is really interesting. I would love to be a fly on the wall during the discussions. Now, will Russia demand their capital back, including the interest? Because seeing them let it go 100% would be very impossible, if not impossible. It's a lot of money anyways, right? For any country, $200 to $300 billion is a ton of resources. Now, how will the EU raise the money? Are they going to raise local taxes or sell euro bonds that can push interest rates up? And this is the dilemma the EU really is in. So we can see that the EU economy is now getting battered on all sides. They have refused to work with the Chinese, they're hammered by US tariff threats, and they have a big bill to spend for defense and for Ukraine. So there's only one outcome left. The EU will have to find a way to either make up with Russia, and I give that percentage chance at less than 1%, or they can cede more control to the US and hurt their industries further. I also put a very low probability on that because the EU, as we can see, they are starting to resist. So the most likely outcome is for them to unlock their fiscal rules and spend more and more money. So we could be at a point where the EU starts to break all fiscal discipline and is forced to deficit spend their way out of this mess, and is perhaps the only way out. So if you want to think about it in a macro picture, just look at all the major economies going forward, and this is why inflation is not going to go away. We have the US embarking on their tariff war, and eventually Trump is going to find out that he will have to spend a lot of money to reshore production as well, so the US will be easing. What do we have also on the second biggest economy in the world, China? They are starting to stimulate, and they also want to boost their own domestic spending. Once again, it's stimulus. And the EU, we just talked about it for over 10 minutes now. The EU will be forced at the end of the day to find a way to spend more money to bolster, to rescue their economy. Whether that works is up for discussion, right? But it's going to be quite implausible for them to sit back and do nothing. And the simplest way is to simply spend more.